Hey guys, Boris Sasser, BK Force. Welcome to our Forex Weekly Technicals for 12/8, 12/12. Where are the trades? Well, what an exciting week this week has been. I am just absolutely dead at this point. We did a lot of live trading this week. We traded ECBs live, we traded NFPs live. Those of you who traded with us had a great experience, and I welcome everybody to try out BK Forex if you want to understand exactly how to day trade professionally the currency market on a day-to-day basis. But I got to tell you, man, this volatility was so much fun, but I am just completely whipped at this point. So looking at the charts now, I think the situation is clearly radically changed towards the dollar on a positive side, but it is clearly also just getting very stretched out on the overbought side. I mean, looking at the euro, of course, had a plunge. But what I think is interesting about the plunge today off of very positive NFPs is that it really did not make any fresh lows post the ECB lows. We're just finding butting heads here around this, underneath this 23 level, and I do think 2250. And as a matter of fact, if you really go out on a longer term chart, you see the 22, 2150 are really much greater supports. I'm trying to see. Let me actually see if I can just pull up the weeklies charts. You can see the weeklies, right? So you see this over here. We're approaching this. This is the weekly chart. You're definitely approaching the lows here in between this 120, 122 level. That clearly is going to find some bargain hunters, especially, and this is the critical thing, especially if the Germans try to do everything in their power to scuttle the Kiwi program for the time being. So yes, there is massive divergence in Kiwi policies. Yes, U.S. is probably going to hike rates Q1, but for the time being, I think just the natural positioning of the euro suggests that maybe we're getting close to somewhere in the bottom. It's not a kind of a case where I want to be sitting here buying falling knives, but I do think that at 2250, just even a mediocre bounce towards the 2350, 2400s could be in the cards as we kind of readjust ourselves. Technically against this very strong move. Similarly, and I know this looks like just a vertical move to the upside, and today certainly was just a huge breakout move again. We took out the 20s, took out 21s. But this is, I think, beyond overbought at this point. And so you can't chase it. You certainly have, the power of momentum on your side. But if there's anything that gives you a chance, let's put it this way. I think there's a strong possibility that we're going to come back and test the 120s. Maybe we're going to take out 22s first. Maybe we're going to top out around 2250s. But eventually, very soon, we're probably going to want to come back and just retest the 120s. We're not going to run away from the 120 in a straight vertical line. The Japanese themselves I don't think want to see the dollar-yen relationship get too far ahead. On the other hand, if you're a pure Momo trader, clearly 125 is your next target, and you may be seeing that in the months ahead. Let me just take a look at a monthly chart just to show you. So yet another reason for why I think long-term trends against this breakout of the yen really speak to me. If you look at this over here, where are we? What's the highs here? 23. So yeah, 2350, another 200 points essentially as the absolute topping range from this move. Definitely look like a corrective move. That if you start to scale up against this position, you clearly have to scale up small and pretty much be convinced that the 2350 does not get broken. If it does, then you're in trouble. And I would just stop myself out. But trying to trade this counter trend for a correction down to 120 may not be a bad idea just for a short-term profit-taking move. Again, I'm not negative dollar yen long-term, but I just think it's incredibly overstretched at this point, and some sort of a pause may very well be due. And I'm looking here at the monthly charts just to show you where the overhead resist here, which is this 120, 123 level, definitely coming into play. Next, cable, which is just kind of dead in the water. One of the things that we're sort of looking, I do think the break of these lows in the cable opens up the run towards the 5500s. We are kind of positioned to try to see if we can make the run towards the 5500. So cable definitely has a little bit more to the downside. And again, this is a story of relatively slower UK monetary policy versus US monetary policy. There isn't, as a matter of fact, any real news on UK front except manufacturing and industrial production, which is a minor, input on the UK calendar. Everything else here is really going to be just a question of how much more dollar strength we're going to get, and whether the market is just, does not really seem to be loving cable at this point. The fact that we closed on the lows today is very suggestive that there may be a little bit more probing here. I do think once we get to the 55s, like let's take a look at the weeklies here. The 55 is clear support here. So this was the former resist that now becomes definitely a new support as we kind of make our full round trip turn here towards the 55 level. So 54, 55 probably is going to provide some support and a potential bounce back up to the 56s. There isn't too much downward level here, but the 55 seems really to be the primary driver here of specs as they want to move it in that direction. Taking a look at the Aussie next. Aussie, just a one-way trip here. 83s probably going to find a little bit of support, but really everybody hates the Aussie. We have Australian employment coming up. If that number is weak, that's just really going to contribute to this incredible, I think, market psychology change of turn that the RBA now is much more likely to cut rates than stay neutral for a long time. And if you get a cutting of the rates out of Australia and increasing of the rates of the U.S., the interest rate differential story just becomes a massive bailout trade. And so the Australian dollar, which may have looked like a safe place to park money just a month ago, is now looks like a stampede out. And we could ultimately really target 80 on the trade. So 83 very vulnerable. Taking a look at the longer term charts here. I mean, these are all fresh lows, so there is, we've got nothing going on here for a long time. Let's take a look at the monthlies just to see if there's anything here. The monthly really doesn't come into the 80. So you see how the 80 now is the real big support level. So from 83 to 80, I mean, I don't think it's going to be a straight move down to the 83 to 80, but it still suggests that there's more juice to go. Certainly, probably another couple hundred points here on the Aussie in the meantime. Caddy is also interesting. Caddy to me is fascinating now because we're at this really, really critical juncture of this 115. Now, this is actually monthlies, and you see how, we're really like at key breakout here to move to the monthlies. I do think. Let me just sort of push this out. We've on the yearlies, this 1450 has been contained, but if we break out beyond the 1450, then 1500 really comes into play, and more importantly. The trade beyond the 1500 really kind of opens up the run. So the only thing that's sort of keeping the Canadian dollar from really taking off is the fact the Canadian economy is getting a slight benefit out of the pickup in North America, but some of it is also being offset by the very sharp decline in oil. So it's going to be sort of interesting to see if you get further declines in oil and you get a disparity between U.S. and Canadian monetary policies. You really do have a chance here. A very near term, I think this week, as a matter of fact, to be targeting 115 and perhaps something beyond that as we go along. Kiwi, which is the last major that I want to take a look at here, just basically revisiting the lows of the 76s. Here, the 75 is really the big trade, I think. Sort of that's been this has been quadruple bottom here. The 76, 75. This is a weekly charts, and you see that really becomes very, very lumpy support here. So I do think that Kiwi, in many ways, probably is going to provide some support, unless the RBNZ decides to really kick the guy when it's down, comes out this Wednesday and just basically says, hey, we're going to intervene. We think the currency is worth 70. If they put some kind of a hard number target on it and say that's where they want it to go, you may get a lot more volatility out of the trade. But if it's just basically a repetition of last month's statements, you're probably going to be able to hold bid here. As a matter of fact, probably the most interesting trades next week in terms of on a cross basis could be the Aussie Kiwi trade, because if you get sort of a steady as she goes RBNZ policy with negative Australian employment data, then you really do have this potential of the revisit of the 105s. I mean, the Aussie Kiwi basically just sort of completely flipped around. It's interesting because, I was in Singapore this summer, and I said one of my favorite trades was a short Aussie Kiwi on a longer-term basis, and I looked like an idiot for a very long time because I liked it around 110, and of course it went up against to 112 against me for a while, did a triple top, but now the trade is really starting to take shape, and this is really, it's not so much a trade of loving the Kiwi, it's more a trade of hating the Aussie more. And the potential for 105 here really comes into play here on a cross basis. So that's kind of how the week shapes up. Next week should be a little bit calmer, a little bit less event risk, give us a chance to catch our breath. and get ready for December. But it's really going to be the calm dollars that will be, I think, the focus. Maybe watching all of those things very carefully. Wishing you guys the best of luck, the best of trading. Boris Schlossberg, over and out.